Go. Okay. And your broadcaster that's on. Can you guys hear me? I'm assuming you guys are. This is Fadi Hemzi, and it's 5:05 p.m. on uh, I'm sorry, November 20th, 2024. Um, very briefly, we want to discuss the third uh, generation or third reinvention of the ES chat room, as led by Mark Esposito. You guys know about Mark. We've done some option webinars with him. It goes back to 2008 when I was in Chicago. I've known him about 5 years prior to that. This is using HA technology and his experience. And this is the chat room we use it on. The performance is posted. We have also a decorum we have to follow up. It's posted also on the landing page. We do have two offers we're going to show you at the end. So without further ado, let's get Mark up here. He's got remote control as of now, and then we go. Go ahead, Mark.
Okay. Thank you, Fari. Hello, everybody. Good afternoon, good early evening. Thank Fari for everything that he does on a continual basis. About 5-6 weeks ago, he asked me if I would have any interest in helping out and joining in the ES chat room as a moderator, and I accepted. We have some conditions, and that's my time requirements because I've got many responsibilities of which I do on a daily basis. And at the same time, I think I started trading options. First, I was a clerk in 1978 at the CBOE. I became a market maker in 1981. I traded as a sole prop from 81 all the way until 1999. Partnered with Wolverine Trading LP for 4 or 5 years as a designated post-market maker, like a specialist in New York, but in options on the CBOE. And then in 2004, I moved on from being a partner with them and was asked by Bill Rayner, who was the CFTC chairman at the time, if I would be interested to come and do what I can with my knowledge, experience, to make One Chicago, the single stock futures exchange, a pivotal product in the financial market. So I left my post at Wolverine and went to work with him. And I stayed there until 2015, at which time my tenure there was 11 to 12 years. Interactive Brokers came in and became a partner, Thomas Pettifee with the CME, which had at that point consumed the CBOET in its ownership, and the CBOE had ownership. And I parted ways with One Chicago in 2015, and I went to work with a very long-time friend, helping him manage a biotech fund, which was always a dream of his, and we did that all the way until a little bit past COVID, which was in 2022. Obviously, a little after that. And then since then, I've been trading and paying attention to what's been going on in the marketplace. And I also acquired a position with Macmillan Analysis Corp as their lead mentor for options and trading. And even though they are an options platform teacher, a lot of times people come in and like to understand futures. And I thank Fari for gaining that experience and knowledge over the past 10 years. So I'm able to help in that area as well. And now I'm in the options, the ES chat room for ES trading futures, which I'm thoroughly enjoying it. I'm enjoying it because it's a very dynamic product. It's very relative to everything I know in the industry. Since I'm very active in the SPX, which is the cash based instrument, which obviously the E-mini is an offspring of or a leader of. And I'm very familiar with SPY, which is the SPY ETF, which is 1/10 the size of the SPX. So there's a lot of correlation of instruments, which I'm very privy to and very hands-on, and spend a lot of time trading them. So when I'm in the ES chat room, it's a combination of adding my experiences of SPY, the ES, and the SPX. So SPY and SPX on the option side, joining that in with the ES, which is the futures. If you want volatility and movement, you're in the right area. I mean, that's what you get when you trade ESs, and Fari trades the NQ on the other side. And the team at HA is a tremendous group of people with many years of experience and great decorum. They're all very respectable people, and they are very good at what they do. And Fari is the glue that keeps them all together and keeps moving forward. And one of the great things about Fari and Hamzi Analytics is their ability to make transitions, which is what you're looking at in front of you, is the tech of that transition. From every time we look and see something that can improve it, Fari finds a way to program it, test it, and bring it to a solution for everybody to use. And it's one of the greatest tools I've ever seen. I've used HA indicators. I can't remember when I started them, probably in 2008, 16 years. I use them for trading stocks, ETFs, and because of that, it helps me with my options trading. But more importantly, the technology that's been developed, which is right in front of you, is called OTF. That's for ES and for NQs, the futures on those products. And you can see in front of me, I have, you can follow my mouse. I'll basically tell you what we have, and then I'll give you a little background of what I'm going to talk about today. So on my left here, you see EZ24 OTF plus XL plus. OTF stands for other time frame. And you have a XL plus. Adjacent to that, you have the plus large. And in the middle, you have what is called the ESZ, which is the December contract for futures for ES. DMZ, which is the special, as we all know, from the war zone in Vietnam, demilitarized zone. And we have the ATR, which is average true range, which when you think about the average true range, it's basically, the volatility that's created during the day, what expected range it's going to move. We look at the bottom of this, happy ST vol. You can see how this jagged line goes down when it's quiet and rises when we get volatile. And that's kind of what I use to help me with putting stops on orders, which we'll talk about that. To the right of that, you see OTF plus medium, another time frame. And onto the right of that, I have the SPX 15-minute. Why? Because if you look at the SPX, it's so closely tied to the ES and the ES to the SPX. It's unbelievable. And it's very important to track both of them. Now, what is OTF, other time frame? It's based upon volume. Okay, it's not a time frame. It's based upon trades coming through the CME pipes, the Globex pipes, of all the ES future trades. XL plus is those blocks that are greater than probably 100. The OTF large is probably anything that's over 25 to 100. OTF medium is everything that's probably around the 25 to 15 or 10. And there's even a smaller OTF, which I don't have on here, which is for all the contracts from 1 to 25. And then we have the 15-minute chart here in the SPX. These charts are basically grabbing the feed from the Globex ticker, CME, and it's feeding it into the platform, and it's creating these bars that you see. They're candlesticks, as normal candlesticks are. Up volumes are green, down volumes are red. You see the highs and the lows and the openings and the close by the wicks and by the magnitude of each of the bars. So this is the instrument that I use and convey information to, along with other sidebar charts that I pay attention to, which are regular 30, 60-minute charts, 15-minute charts. I look at the ES, I look at the SPX. I also look at, to my left, I have a constant active screen for the SPY and the SPX. So I'm constantly seeing the volume and open interest and all the strikes of the options. Why? All these worlds are all combined and correlated. And that gives me a better read and feel for where I'm looking for support and resistance when I'm looking at option strikes. Because as people that are understand options are Greek related, meaning they have delta, they have gamma. Delta is a percentage of move relative to the percentage move of the stock in the option world of the certain strikes. The at the money having the most average delta of 50, both call and put, equals 100. How about that? 100 shares of stock, which is what one contract is. And then everything varies from that, both on the call side and put side. So when you look at the option world, you've got to tie it in because the exchanges now have what they call 0 days to expiration. And because of that, like yesterday there was over at least 3 million contracts trading the 0-day options of the CBOE. Well, you combine that with the amazing volume of the ES and the NQ, you have the dynamics of the marketplace. So these instruments and tools are all that I pay attention to and use and combine to use what I have in front of us. So what is OTF? So let's go from the top to the bottom. Let's go and take, for example, OTF XL Plus all the way on the left. Well, it's pretty easy that you see the bars and the wicks. And then you see these red lines here, and you see the yellow and the green lines. Well, these are called sigma channels. What are sigma channels? Dynamic compilation of something that's very similar to standard deviations, but it's in real time. So you could see on the upside the different levels, 3 of them, and the median being 59.14, and then the downside all the way down to 58.69 for 3 deviations / 3 sigmas. Our upside, 59.58, which is 3 sigmas up. What else do we have there? You have these little dots. They're like purplish, and down here blue. What are those? Those are levels where the system is recognizing a possible overbuying. But you notice and say, well, wait a second. If you're showing an overbought area here, how can it continue to go up here? Well, they're on top of each other. They're saying we're in an overbought territory, but it's not saying that's a place to sell. It's giving us a heads up to pay attention. Well, what are we paying attention to? Well, when these dots kind of go a little bit horizontal as opposed to vertical, that means when it's really getting tired. And notice what happened here. Spacing, on top of each other, boom, downward. Okay, so you look at that and say, wow, that's a great indicator. Yeah, but that's not what I call the cat's meow. What's the cat's meow is down here. This is the part of the puzzle that's the HA intelligence built into it. This is CI and CI diff. And what this is basically showing you is if you look at it correlated to these different moves in the bars and look at these bars that are lower and the CI trends that are jagged or smooth, you can see correlations. A downward move, downward slope. An upward move, an upward slope. And this is where it's all at. This is where everything starts to happen. So I'll explain all that, but you see that in every chart. In the XL Plus, the plus large, the plus medium, and then you can see we even have it tied into what's going on in the SPX. The middle chart, okay, which is basically called the ESZ DMZ. DMZ, major part of the technology, and I'll explain to you why. And then there's all these different areas here. But before I go into detailed explanation of what I just described, well, I want to tell you about how I handle and what I do in the ES chat room. So every night, which I've done some of it already, I start to prepare for the next morning. Obviously, you're going to see the market trade after hours, which it does. unlike in the past where you had a lot of volatility in after hour movement, a lot of that changed. Why did that change? Well, it's because finally the SPO, upon some advice, some people that passed on to them, I won't tell you who, said, why don't you open the hours up of the SPX? And we know the SPY ETF trades at 7 o'clock and reopens again at 3 o'clock in the morning Central Time. Why don't you open up the SPX options that are past the 0 days and let them trade a longer time frame so folks that trade ESs or vice versa can use them as their correlated hedges because they're so tied. That's probably why when you get to the later hours of the day, like after the SPY closes at 7 in the evening, 8 Eastern, and we go into the mornings, all of a sudden you don't see those crazy middle of the night moves anymore. Why? Well, there's two gigantic instruments tied to each other: ES to SPX, SPX to ES. Makes for a calmer environment because there's thousands of options in the SPX and there's only one ES. But the volatility can be harnessed with the options that people trade in the SPX when they tie it to what they want to do with the S and vice versa. So all that preparation and getting ready for the morning has to do with looking at charts, understanding the two instruments. And then what else is left? Getting ready for the morning. What happens that we all know in the early morning? In the early morning at 7:30 Chicago time, 8:30 Eastern time, here comes all the econ news. Here comes all the important economic numbers that everybody's waiting for with bated breath to see what's going to happen once they either meet, go lower or above expectations, and then everybody knows what happens then. The ES goes wild, okay? It's moving one way or the other, and demand is driving it up or down. So making sure that we're ready for that econ news. Then we're looking at what other scheduled events are on the docket for that day. A lot of times you have the Michigan sentiment, 9 o'clock Central, 10 o'clock Eastern. Then you have the Fed governors, and everybody's willing to listen to a Fed governor. So you have all these other pieces of news that once it enters the environment, gets a reaction to the ES, to the SPX, and to the SPY. Okay? So all that has to be basically visually aware and prepared for. Because we don't want to jump into a tsunami, or we don't want to jump into when Mr. Powell stepped into the podium. So we got to be aware. So we're always paying attention to events. Why? I like to be able to trade knowing what's about to happen as opposed to know what's going to happen that I don't know because of volatility. So we do all that. And then we have tremendous colleagues that give information to us that we coordinate with each other on the NQ side, on the QQQ side, on the SPY and the ES as well, in coordination with what I do. All this information gathered together gets a preparedness for the opening of the market, 8:30 Chicago, 9:30 Eastern. And then I say good morning when that bell rings, or I find a trade that might be available between 9 p.m. to 9:30 p.m. Eastern before the market really opens as a whole with all the stocks. And basically see who I have in the chat room and say, okay, here we go. I can put out some levels of ES. When I talk about levels, I talk about what I think is the mean for the day, median, and where I think the levels are up and down. A tighter range is going to be up one, down one. A larger range will be up two, down two. As far as levels, those are a little bit like sigmas, but they're a little bit more exact, a little bit wider. So that's all being prepared for the people in the chat room. So when we think about it, there's a lot of dissemination of information from myself, my colleagues that are putting out information to those people that are trading NQs in the NQ chat and that are trading ES in the ES chat. So now the whole group's there. They're loaded with information. Now what are they waiting for? They're looking for an overview of what's happening. And then from that overview and that constant feedback, they're looking for trades. Okay. What do? The market opens at 8:30, 9:30 Eastern, and now I'm paying attention to the tech in front of me. The most important tech that I'm paying attention to is the middle. I'm looking at what's going on in a 5-minute chart. Because why? Well, this one is not another time frame. It's a definitive 5-minute chart. Whereas the other time frames are based upon volume. Just as significant and more powerful, the 5 minutes, what everybody understands and knows and can see. And when we got on top here, all these crazy lines, these top lines here, you can see these stars, these pluses above, just like I explained those chartreuse circles to the left, the pluses are similar, showing that the market's starting to get overbought. And look what happens when they go horizontal. The market doesn't keep going up, it kind of flattens out. We've got these pluses that are in the brown. This is the MBS that's being created for that range of trading in the 5-minute chart. And inside of here, here's DMZ. Wow, DMZ, powerful tool. What is the power of it? It's an area that once the market breaks out of, when it's tightly banded together like that, it starts a trend. When it breaks down, it goes opposite of that. Meanwhile, as volatility continues to be extreme, the DMZ stays wide. As things calm down, where you get some side-to-side action, the bandwidth of the DMZ starts to tighten. Well, what's going on with that bandwidth? Where's that coming from? What's that all about? CI diff, okay? Here's the CI. And the CI, that's the smooth line, not the jagged one, is taking those bumps and grinds up and down and is trying to create a smooth representation of that. Now, when you look at that, well, what does that correlate to? It correlates to the CI diff. This is the zero median. Look at the zero median. It's kind of like the medians for independent ES at different time frames, but here's the actual 5-minute ticker, zero median. And what do you notice? When we're below the zero median, it's the trend that looks like we're below, we're going down. And then when it crosses, here's a CI cross to the upside. What happens? It's breaking through, and it's also crossing through the DMZ. Very powerful tool when you get a CI cross up and you get a CI cross into the DMZ. That's a confirmation to me that we are going higher. And what's happening? You see the bars here? They're a lighter shade of green, a little darker until they really get dark and they come to an area that's higher here. And you notice what happens here? There's a correlation. You know, we're reaching tops. What's this blue line here? That's a VWAP. So you see a lot of different significant lines that are trend lines that help you. What is this dotted line here? That's the median of the DMZ. Also another very representative number that means something and is being charted for you in a line presentation, a dotted line. So now here you see the changes in the CI diff on the upside. Still got the higher the bars, the bigger the bars up or the bigger the bars down. Notice what you see between the two trend lines. One is depicting the CI, one's smoothing it out. There's a gap. What does that gap mean? That means a gap is telling us that these bars are extending. And if these bars are extending here to the upside in dark green, and the gap's widening, what do you see above here in the bars? Well, they're going straight up. They're almost vertical. That's velocity. It's picking up the velocity. And when that velocity starts to lessen, the bars start to get smaller. When it tightens, they get even smaller. And normally when they get below where they peaked, which is at a pretty high number, I love when they get to plus 20 or plus 25 or minus 20 or minus 25, which is where they've been a lot the past 4 or 5 days. That means those are areas. What kind of area? The red is signifying overbought. Okay. But it's not telling us to sell here. It's not telling us that at all. Where is it telling us to sell? Well, I told you about where it told us to buy. Well, guess what? We crossed down here. You look at it up here. How about that? Now
Mark,
we're getting red bars.
Mark,
Let's
may I interject for a second? I think
Go
we're
ahead.
having trouble seeing your mouse.
What's changing that?
I
have
have
a
no idea.
normal large mouse.
Yeah, exactly. The same thing you used today. Let me deactivate it and reactivate it again. Give me a second.
Okay, go ahead.
Or I can sit here and move the mouse for you from my end if I concentrate on where you're going.
All right, how about now? Any good?
No, go ahead. Let me take my hands off. Go. It says you have it. It says you have the screen, but we don't see a movement.
Yeah, I'm moving the mouse. I'm definitely moving the mouse.
I can't see it. Hold
Anything
on.
in tools?
Dennis, can
No,
you
huh?
see it? You're the one who reported it. Can you see it? Dennis?
It's a big mouse. It's about a half inch in size.
Yeah, we can't see it.
I mean, I see the little blue mouse moving around, but
That's me. That's
uh,
me. I'm on DMZ
right.
ATR right now.
Well, let me disable remote control and then bring it back.
Okay.
See if that helps us. How about now? I'm in the middle of DMZ.
No, cannot see you. That's me.
I see the
Uh,
little blue mouse right there. I
yeah,
see it
that's
down
mine.
here. Yeah,
Not yours. Uh,
very.
ki-
Uh, uh, it's what I do every day and how I get
I
control
know.
every
It
day.
worked this afternoon. He go to meeting. I know. So
We never have that problem during the day when you give me
right,
control.
right. I don't know
We're
why it's
not
not
doing
working.
anything here. Let me turn my mic on and off.
Okay.
Anything? Can anybody see a bigger mouse?
No, move it, please. No, we don't. I don't see it. Um, go ahead. Let me see if I can run my mouse in conjunction with where you're speaking. Okay. So
Okay.
because go
So I
ahead.
see your mouse right there.
Right.
I see the blue mouse. So I was talking about how I was comparing the cross down and overbought area here of the CI lines,
Oh,
trend
down here,
lines.
right here.
Yeah, it's right there.
Okay.
And
Okay. Gotcha.
it crossed down, and now we're breaking through DMZ on the top, which is a very important uh,
Yes.
indicator. We're breaking down and we're crossing down, and that's a sell. And look what happens at the ensuing time. Now, does it tell me to sell right here at the very top, which is about 59.42? Absolutely not. No, no. But we don't need that. Why? Because the trends are so significant that we just need to get a percentage of it, 60 or 70% of it, to make a really great trade. So now, after I see the cross down and we're breaking down, I'm selling in this bar somewhere up top here. And you can see it went way lower at one point. Then it came all the way back and it made another red bar. Look at the trend here. It's still tilting downward, still tilting downward. So, and you can tell as the volatility is increasing and this trend line's getting higher up, above 25, 27. And like I say in the chat room, every time if I miss a trend going up or I miss a trend going down and it's starting to extend itself, where these bars just to the left here on CI diff are green.
These
If I
right
miss
here.
the move up, yeah, up to the middle, right in the middle.
Yeah.
If I miss the move up, well, guess what? When we're up this high, I know it's getting ready to set up for a move down,
Right.
which is where we're going to catch it. And Faria will show you where that happens at right over here to the right.
Yeah. Here's a little tidbit, guys. Kinematics of the markets. What's happening from a physics standpoint? You think of a price, and I'm just going very brief on physics, as a distance of travel. Okay. So you got distance of travel. That means price keeps changing, going up, 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 up. With some noise, we want to take that noise out. CI does that. CI was the first indicator that combined direction, that is trend, with momentum. So not just it gives you direction, but it also has a zero lag because momentum is zero lag by definition. So it combines the two. We take one more derivative of that. So think of it as distance, CI as a speed, the CI differential between the raw CI, which is the teal, versus the smoothed one that change colors. If we go back here quickly, you'll see the CI colors. You got red, gray, green, back to gray, back to green here, the smoothed one, and then green again. So this becomes speed, this becomes acceleration. We plot the differential of the CI. So when the differential is positive, we're rising. When the differential is negative, we're dropping. But keep in mind, this is the speed change. This is the acceleration change. Recently, what we added, color gradients. So visually, I'm very visual. visually you can see the rate of change of the acceleration itself. Those of you with good math and physics background, this is a no-brainer. You could imagine almost. Just look at the CI diff. You can tell where price is supposed to be. We had a fellow here named Ken Simmons. Ken Simmons. In our landing page, there are a bunch of webinars from different people: Peter, Mark, myself, Anne Marie. What's notable about Ken is that he says, "Give me an initial price, close the price, give me CI and CI diff. I'll tell you what the price is." Now, he's a genius. He's a math genius. I understand that. But that's how these things are derived. So this data tells you which direction we're going, how fast we're going, and what's our acceleration. So what Mark is saying is, if the acceleration drops, I know I'm near the top. I need to get out. I still get a positive slippage to get out. Once it tops, I have to be out. Why? You're fighting against the trend and fast. And now you can have a negative slippage. You try and get out, goes below you. I don't want to get out always here, where it's positive slippage. It's easy to get out, especially if you're trading any size. Go ahead, Mark.
Well, the way Fari just described that, the way I like to think about it, the acceleration and the separation, then when it starts to lose that acceleration and the speed, it's like you're driving on a tollway going 90, and now you see something ahead, and you start to tap on the brake, take your foot off the pedal. And this is what happens when that happens right here. Going 90 miles an hour, and now you're down to like 15. Okay? It takes a little bit of a little time for it to happen. It doesn't stop on a dime and just go down or up. So you get the opportunity to see that happening, which gives you an opportunity to react. And why is that important? Because what happens if, and there's many cases down lower where I'll show you, where it isn't decelerating, it isn't changing direction / trend. It's just slowing down and getting ready to go right back up again or right back down. So when you see that here, it's an amazing representation, and understanding how to read it and interpret it is kind of what I'm passing on to everybody in the room. And that's how I'm comparing where we're at as far as the value of the ES. I mean, I don't forget about the numbers. I'm not just trading lines and bars. I'm trading values of where things are, and I'm looking at other charts relative to, where I see levels where there's resistance and support besides the trend lines in the tech. Because these trend lines are very different than, normal 3, 5, 10, 15, 30, 60 weekly, monthly charts. So it's a tremendous value added that complements the synergies of things I've already have been doing since 1981 and looking at charts. So when you go down, this little chart in the middle has got a lot of information. Down here, we talked about CI and CI diff and acceleration and separation and where the trends are up and down. You got ST vol here, which is like gives me a handle on as the movement is taking place, going up or down, what's happening with that movement volatility wise. Obviously, this morning when we had that crazy move down, and even the day before yesterday, the ST vol was about got up to almost 11.5, 12.
Yeah, right.
Okay, right in there. There it is, 11.5. Mm-hmm. Well, that's telling me that if I want to make an ES trade, I need to have a 10 handle stop. That's a pretty awesome stop, right? Yeah. 10 points, $50 a point, $500 stop. I better be right if I'm going to put that amount of risk on the line. So it helps me with that, and it helps me understand how I have to evaluate when do I want to make a trade that's worthwhile. Do I want to risk $500? Well, unless I can make 3-to-1 money, that's a tough trade. So I may have to sit on my hands while this is happening. Mm-hmm. Or I may be waiting for a turn right here. You see it right here in the example he's showing you?
Where?
Look at this turn. Cross up.
Mark,
look at how low CI is.
Mark, we don't see a cursor, so guide me to show it. Where?
Go all the way down to the bottom in CI, where the blue
right
is
here.
going above.
That low. Yes.
Yeah, right
there. Yes, okay. Just a quick comment, guys. ST vol is just short-term volatility. It's the correct definition of ATR as done by Wells Fargo. the inventor of it. But the code you have in TradeStation is wrong. Yes, it's recursive, so it looks at itself. So it's got a bias while in that bar. We corrected that, and we renamed it so they can't, by some craziness, write over it. And so this is our 7 bars back of an ATR. So at the 5 minutes, you're looking at 25, 35 minutes of data. That's a very good, and you can see as these start to peak, we were hitting the bottom, and see I rotated at what level? Negative 38, 39. This is like you see these once a month, maybe. So this was a strong bottom. How do we know? Look what it did after that. He did a retest, and boom, another one. It pulls up. Now, if you look at NQ, this was more pronounced. Okay. Now, other problem we had, TradeStation locked it a little bit. I don't know if other platforms did or not, but as it locks, it creates uncertainty. So the fields were all over the place. I at one point I just said this. I so did Peter Cook in our NQ, and I looked here, and here was bad too. And yes, there was no clear decision to trade. I pulled back. I said that here. I came and shared here, and I said, guys, my data and Peter's are saying this is not something we should trade because there's some data issue. It ended up at lunchtime. We shut down all the 3 chat rooms, refreshed the data, reloaded everything, while everyone else went to lunch. And the traffic, the tick traffic. Remember, OTF is other time frame. You're looking at block trades, not just volume. It's the intelligent parsing of volume. That was very low, so we could do it. Otherwise, when this is intense, you can't refresh your page. It'll take forever to load. We always trade open early, very early in the day, to get all the data in, because at night we erase everything. So we start fresh, because my background was neural nets and um, tick data and the dollar weighted volume, which was based on individual trades. 150,000 distinct option contract we were watching. You got to pay attention to the data. If the data is not good, garbage in, garbage out. This is as good as your data you give it. So today we had to shut down everything for about 5 minutes, came back by the lowest time. But you could see the range of what CIs were doing. This is rare. Mark and I were trading in 2008, 2009 when I was in Chicago. One time we saw negative 50. And it was like right after, I think, Boycott came in. Tim Geithner came in as Secretary of Treasury. While it added stability to the market, this is like Thanksgiving 2008, but the range was expanding. And as a trend following indicator, it got crushed 1 point to negative 50. I haven't seen it yet. Maybe we will. Our SKU data says, as you know, Tico posted that. SKU data, and that's a warning, you gotta be aware of this. We're in that window now. We got a signal. Let me show that. I'm sorry, Mark. I just want to, for this is a PSA, public service announcement. You see SKU? It made a new all-time high, the goldenrod, okay, all-time high, and it's at 2 sigma of itself. This says we have a 90-day window of a major problem. I mean major. Probably in 10, 15 to 20%. We're in that window now. Today's the 20th. That's at 60 days. So next 3 to 4 weeks, we could have an event. What's going to cause it? I don't know. I have no idea. As I always say to CNBC, I get the data that tells me there should be a bad news. It's your job to find it as a journalist. Find it and report it. But I think we should be guarded up going forward. And this gap is going to get filled. All gaps are going to be filled. My question becomes, as we go to fill this gap, this is the election gap. As we go to, it doesn't matter who wins or loses. This is a chart pattern. If that's going to be taken out, would that coincide with something else that's wrong, big? Because that's what this is saying. There's going to be big ones. They're going to be small. And then, God help us into Christmas. So, go ahead, sir.
Why don't you explain the bars right above the data, the little chart area above the
These
tick,
above tick, you mean this one?
right there, the IB bars, right?
Oh, okay, sure. Let me open that up. IB is something I did learn in. Well, Marshall Fried and I, very eclectic trader. Just actually talked to him yesterday. We were the first thing here we designed back in '95 because he had heard. Now remember, we're in LA, right, not by the beach. He had heard that in Chicago they like this. What's happening in the first hour or first 2 hours, and that because by the time we opened, the major news data was out 8:30, right? Like not far. Or tomorrow we'll have a jobless claim. But then you have some data points at noon. I mean, say at 10 o'clock, which is could be like existing homes. I think that's tomorrow or Friday, or consumer sentiment definitely on Friday. So you get those also in. By the time you get to 10:30 Eastern, 9:30 Chicago, we have established what's called IB, the initial balance between the high of the day of that first, I'm saying, high of the first hour and low of the first hour. And then you scale up half as much. So if this is 100 points, we're going to go 50-50. By the way, today, again, one of actually clients of Mark, uh, Johnny, we call him Island Johnny. He loves to take the kids and the family down to the islands for a month or so. Except he takes his laptop with him too, so he's training early in the morning. So next time I think we're going to see him with a waterproof laptop. He likes scuba diving. Yeah, he reports that today. He reported that in NQ it was the highest IB level observed this year. So today was an event. Okay, you don't get that every day. And he does the averages and all that, which for other line stuff. But today was highest for the year. These sort of things kind of signal some issues forward. Here's what we're having here. We broke down heavy, but made it low. Then we struggled, double test. Oh, I'm saying, t- uh, uh, what do you call it? I have a name for this. I forgot. It comes here to see how far it can come to test this. That's the one they want to buy. See a W. This was like a broken W. Bullish. Went up. Then they sold it again. And you could see this is MBS, which is the range of intraday range. So it came through that. It's a median of the range so far for all day, not just the first hour. And that wasn't touched until we closed. They get reset at the end of the day. So these levels become crucial. If you go back here, okay, you could see we come to these levels, sits there for a while until they break it. It goes up and stops there. So when I got to Chicago, the first thing I think was that I want to revive this indicator. I was teaching at CME and SIVO, so I had passes to the floor at will. And I got to know a few, some of them were members of my social club there called a Union League. Next door, there's a lot, most of it, well-to-do traders hang out because they can afford it and all that. I made friends, took them to lunch, whatever, bought them some cigars to see how they behave. This is the back of an envelope calculation in the old days. They keep track of high and low of the first hour at 10:30 over there at 9:30 in Chicago. Just make simple calculation, compute these extensions, and then they go with it. So obviously today we had a huge range, so we get confined. It's kind of inside day if you think about it. This is a breakout as it levels up, and you have a 75% chance to go first level, 50% after that, and it drops. But these two are crucial. Usually you don't go to 3 and 4. If I want to extend that, I go here. I'm sorry, 1 second. I go here. This is what we built. As a matter of fact, FT71 borrowed this from me for their work, which is no problem. He's a good friend. Uh, oh, come on. Nope. Hold on. Let me do another way. This is another way. Good thing about tracing is that you have multiple ways of getting something. Okay, that's it. Has nothing with my first and last name. It's first all high and low. We just named it at day one. That's how it's stuck. Okay, then you turn it on. So we're gonna go. I want to say extension 3. I want to say extension 4. Rather than typing true false, you can do it short because you're active. You got positions on. Go there. Now you see what we're going. We almost went to the 4th level yesterday. It was a strong day from the open. Okay, and usually some people are going to fade it. Of course, here, what do you call it? Putin came to have all the longs. Or I'm saying all the shorts were stuck up there and had not got out. Maybe cash, maybe SPY. it sold down heavy, and those guys got out. Look where the levels were. Very much close where the low yesterday was. That saves these people so they have more power to fight another day. But it's called IB. 4 levels are important. We usually keep 2 and 2 open, above and below. The other 2 are based on extension. Why? Because you don't want to squeeze your chart. You don't want that. This was a very bad day. This day just sold, sold, sold. You could see he didn't have a chance even to come up. Couldn't even get to VWAP. Oh, by the way, this is also correct VWAP. Tradition has got some coding issues. You know why? What they give you. These are not traders. They're just coding junkies. They're the programmers. They've never traded one share of stock. Forget futures. Remember, ES notional. I was computing the other day. ES notional right now is the number we have, the ES we have, times 50, right? So it's about 300,000. It's the equivalent of a $300,000 stock. It's not a joke. If you go to NQ, it's even more. It's about 420 because 21,000 times 20. Multiple is 50 here, 20 there. So notional, it's literally billions and billions being moved. So you got to be careful. You can get caught there and you go, oh, I think it's going to go up. Why? Forget your emotions and what you think. Remember, trade what you see, not what you think. Okay, and I was trained a lot in mathematics and numerical approximation and so forth. I threw all that stuff out of the window while I was in Chicago because you learn, you got to trade what you see, and Mark is very good at that, seeing what's going on. That's why a lot of time I come up with an idea I want to test, like we did with DMZ, demilitarized zone. I give it to him. Okay, but okay, and
All right.
so let's go. So I'm saying, let's move the
So
item back up.
EVIB chart in the middle is the tick, which is just the dollar tick 5 minutes for the ES stocks. You see the trends. Very helpful when we're selling off. Obviously, we're surged to the downside, buying surge to the upside. Okay. So I'm paying attention to all of these charts constantly. I'm looking at the middle chart very aggressively. Why? Because of the DMZ. Okay. When I get action in the DMZ going to entering it, like here, with a trend changing to the upside where it's an extreme coming from a low, that wasn't too low. It was only around a -8. But when they get up here, like I told the folks in the room, we're in a beautiful place for a setup for a trade that's going to come to the downside. It's exactly what happened. We're at this 27 high level and boom, collapses. So every day we're looking at every time frame. When I look at the time frames, I look at the middle one as being the most significant, most dynamic. It's got a 5-minute chart to it. It's got CI to it. It's got the ticks to it. It's got the ST vol to it. And everything to the right and left of it is the different size trades. I always talk about the XL Plus as being where the big boys trade because it is the large blocks of ES. Same thing with the large. So they are reactive, but they react a little bit slower, each of these, than the medium, which, as you can see, a lot of times it has a lot of movement up and down, and it'll lead the way because of smaller trades and the way the system is picking up the trend. But at the same time, the medium could be going up, and the XL Plus and the large could still be in their down move. So I got to pay attention to that because this could be a head fake going on in the medium. And that's why I like to have the SPX right next to the medium. Because what's the SPX? The SPX is the ES. When you think about it, they're correlated. If you put the two charts over each other, you'll be shocked at how much they are correlated to each other. So the combination of all this tech and then the discussions that I have with folks is why and what I'm looking at and where I think a possible setup is coming, up or down, where I think there's certain levels that I'm depicting from all of my other charts with also what I'm seeing from the tech. That ends up becoming, okay, guys, this is trade number, what's such and such. We post it. I announce it in audio. I always announce it in audio first so people can get their pen and paper and they write it down, they're ready. Nancy, who was tremendous in the room, she posted as a text message and sends it out in the chat. And there we are. It's not one of those things where you may have seen in the past in other chat rooms or whatever, where all of a sudden you see a text go out, buy at this price, and you look up and it just hit it about a second ago and it made a move against, in favor of that post, and it's on its way to the races. Never. I don't do that. Okay? If I see a buy, if I see a sell, be it a scalp trade, which is something that's maybe 2 to 5 points, or a trend trade, which could be 5 to 15 points. You'll always know about it either audibly first. I announce it. I'm on the mic. I would say the time I spent in the room was about 4.5 hours. I bet you I'm on that mic 4 hours of the 4.5 hours. As you could tell, my voice is hoarse already. And I'm telling them what I'm doing. I put the trade out there to buy or sell. I put a stop with it. And then I put an open target. Why is it an open target? Because I want to see, is this something that I could get where we could run it? Or is it something that I got to be quick? Because a lot of times, as you know, trading ES and trading NQs, things change. The tone of the market changes. Could be instantaneously. I mean, there could be a trade I put on and say, guys, I don't like the action. I'm going to get out right here. And that might be right where I bought it for break even. Or I may take a point loss. Or I may take a 1.5 profit because I just don't like, there's no follow through. I'm constantly giving a verbal analysis of what I'm seeing in the tech, combined with my stuff, combined with the SPX, combined with what I can get out of the option side. And you know the best part about trading is risk management. You know, I'm not in there to put a 5-point stop to make 3 points. I'd rather have a 5-point winner with a 3-point stop, or a 10-point winner with a 4-point stop. So I'm always very cautious with my stops because I don't like losing trades. Okay. And if I'm going to lose, I want to lose a little bit so I can make it up. And a lot of times when you see this ST vol in the middle there is at these extreme numbers. Well, I've been doing this for 5 weeks now. I've never used that full value, which is recommended for putting a stop on in a trade. I'm normally 50% of it, maybe 30% of it, because I don't want the folks in the room to lose money. My goal is for the room, all the participants, to make money. If they don't make money, then I'm doing a bad job of moderating and giving trade suggestions. We all have to make money. How does that happen? Complete transparency. Complete indicators of what that transparency is, audibly and then a text message. What's the next part? Trade management. Do you know that 90% of the retail world blow out of their futures and options accounts in 90 days? And the reason that is lack of knowledge, okay? But more importantly, you know, you think about it. Every individual, when they get a winning trade on, all of a sudden the adrenaline starts to pump in their body. They start getting excited. Well, what's their first instinct? I got to take my profit. They get out. They make 3 points, 2 points, and they're really excited. Now they put another trade on, and let's say they have a stop of 3 or 4 points, and now it's going against them. Well, they adjust the stop down to 5 points, then down to 6 points, and sooner or later they lose 6 points because they don't know how to risk manage their position. What's the best way to risk manage a position? Is we find the right level, we get an entry. Our stop is in place lower 3, 3.5, 4 points max, maybe, even with this kind of volatility. And then all of a sudden, our buy hits and it pops. It pops up 3 or 4 points. Move that stop up to break even. And now what else you do? Depends on how many contracts you have on. You got 1 or 2, well, you got to be a little more disciplined to make sure you take a profit. But if you got 2, you take 1 for the profit, and what do you do with that other one? I call that the runner. Multiple contracts have a runner. What do I do with that runner? Every 2 points that the ES is going up from where I put it on, I'm going to move my break even, my stop to break even. And then when I've got 3, 4 points, I'm going to move that stop up another point, and I'm going to follow that move. So every time the ES is generating profit going up with that one contract as the runner, I'm following it. I'm following it very closely. 2 points, 2.5 points. Why am I using 2, 2.5? Well, if you watch the way the ES trades and these bars are created, you'll see how it ladders up and down, either going up or to the downside. And you'll see where it gives retreats and then goes, retreats and then goes. And obviously, that's why all bars normally have wicks to them, except when you're in a definitive trend up or down. And then there's no wicks. They just keep laddering in that direction. And we keep following that move up. You could turn a 3 or 4 point scalp trade into an 8 or 9 point winner. Why? Because you're following the trend up with it with a stop. You pick a top, it could be because of a trend line's in the way. There's something there, resistance. I want to get out there, just get out. But otherwise, you just keep following up. I call that control. I do that in certain trades on the option side. When you get control, and I reiterate this in the room all the time, if we have a winning trade on, you are never supposed to lose on it, ever. That's bad risk management. You move your stop up, you follow the one, if you have two, up as far as you can. And even if it backs off, you're probably going to pick up an extra 4 or 5, 6, 7 handles because you're doing that, as opposed to just dumping everything for 3 or 4 points. Why do that? You're a winner. Let the thing run for you. That's how people who know how to trade and manage their positions make real money. Why? Their losses are 3, their losses are 4, their winners are 4, 5, 6, 10, 12. Well, when you do that and you have multiple winners over losers, trust me, that P&L by the end of the week is getting very large. And what is the goal? To keep getting winners, to keep getting increased size of points in our winners. And there's 2 different trades. There's scalp trades for smaller points, and then there's trend trades. Fari and I have already showed you a trend trade. I'm in the middle right here, where we crossed down into DMZ, and boom, down here at CI, you see it going through, and then it just went down. And it went down a significant amount. It went down probably about, let's see, I got in at 38 and probably looked at it down all the way to like what? Got down to less than 24. But at that point, I've already got out of one contract, and that's my runner there, and I'm going to have a stop. Well, why do I have a stop? Look at the bar right next to it. Boom, pops right back up after it made this low. Well, if your stop is somewhere in here, it's going to go right through that, fill you, and you locked up your second profitable trade on the second one. So when you look at what's going on in the tech, it's a great indicator. It's a great teacher. It teaches you to look at trends. It teaches you to look at all this crazy volatility and what it's doing and how it reacts to what it's doing. And, the management is super. The management's my favorite part. It's so that we always have more winners than losers. It's so that we always have more points profitable than points lost. And guess what? If you do that on a disciplined methodology and you continue to grow that over longevity, you're going to have a great timeline with a lot of profitability. That's the philosophy of my ES chat room moderating. And I offer any questions from people all day, all long. When I describe and explain something, I get a lot of feedback. And remember, no question is a foolish question. And the other part about a good question is that it educates all the other people who may not have the personality to ask a question. That's the great thing about it. It's an opportunity in an open forum that's completely transparent. We have our decorum of how you have to act and how you have to behave and how you trade. We don't want any hot dogs saying, well, I did this, I did that. You do that at the bar at night or with your family. You don't need to talk about that in the chat room. You got some people that miss trades, got some people that didn't make as much as the other. We want some continuity of happiness and success and profitability. That's the decorum. That's what goes on in the ES chat room today. And I think it's a tremendous environment. I really, truly do. And, I broke my leg 8 weeks ago. I'm entering my 9th week. I'm finally doing rehab. And as I get stronger and more energy, I can only feel that this growth is going to increase tremendously because it's more energy that I could dedicate to it. And you can see Fari's putting out the decorum for how to act in the room. This is a community. It's the ES family. It's the EN channel. We all know each other. Every morning, good morning, how you doing, what's going on? The only thing that we put over the chat is Phil's. When I buy, when I get stopped out, when I make on a profitable trade, and or if someone's got a really important news item that just came out, they'll post that news item. That's what goes on in the ES chat, nothing else. It's not about bantering, about conversation of what went on elsewhere, other products, other trades. It's this community. That's all that we're concerned about. Why? Because this is where they're putting their money at risk. This is where we want them to make their money. So that's about all I have to say, Fari.
I'm just going to add a couple of more procedural items. I asked Nan, no, remember, we have separation of powers here, if you will, or checks and balances, something that's not very popular these days down in Washington. But thank God we're in Florida and in Chicago. Mark trades it. You guys, he was the fill. Nancy adds the fills and averages and so forth. So I asked her, give me a little write up because she has a basketball game. She did that. So I wanted to bring that up. Just read back to you. Give me a second. I opened the wrong box. Hold on. That I copied from the email she sent me. Uh, there we go. Okay. Just want to have it here as a part of the video here. Basically, you'd see what how she does things. She's explaining how I would more than happy to send this to you guys. Explains that how she does it. There are some do's and don'ts. There are certain things that are outliers she can't count because as a master's in statistics and SQL admin for the state of California, which for the the support for the underprivileged, there's like I don't know how many million in California are there. She had a huge responsibility to draw the right conclusion from the right data. She applies that here. So at the end of the day, using these rules, she comes back and posts what Mark was talking about, um, and we immediately capture it on a. It goes automatically through a bunch of logic here. What these values are. What's important is this. If you like to monitor us, we always keep that link out. It's on Twitter, it's on Facebook, it's on LinkedIn. But you could see where we were working on. What we're not perfect. He had a huge issue when he fell. Mark did, but look how he's progressing, and every day is getting better and faster and better. Your average monthly gain right now is $2,000. The fee is $4.99 basis. But hold on, I'm going to give you a better deal than that. Remember the guy? Who was the guy who was selling the hair product? The guy from Chicago. So hold on. Or Lotus Strings, right? Average monthly is that. Average monthly yield is 120. That's not one or two trades. It's 106 trades over 33 days. All of these programs automatically computes. Obviously, this is our weakness. We're going to work on that. We're going to get really average ring trade a little bit higher, but he's compensated with this with the ratio. If you look at it, he's 2 to 1, or like 50% better on the buy side. Once he gets the size also up, and usually it's in the morning, this is going to explode even further. But you see it, 156 profit factor. If you look at TradeStation, theoretical values that come up to be top of the sort are about 1.6, 1.7. Exceptional traders can get over 2. Anything above 2, you should ask questions. Something's wrong. It's too good to be true. But he's on his way. We're proud of him. Aside from that, we're going to be offering you 2 specials. Our base price is $4.99. For the balance of this month, you can join for reduced price. We're going to send that link out to you. But very briefly, I'm going to show it to you here. It's not on the menu. We'll email it to you. But let's go to this. And we're offering 2 deals. 2 months lower price or 4. And you can see a special offer, or if there's, I will send you the link out to you. For 4, it says extended special offer. The difference is this: when you sign up, instead of paying $4.99 up front for every month, you get, for example, on the extended one, if you click there on PayPal, uh, it goes to no, as a special, as a guest. No, yeah, continue payment. Yeah, get it. Especially as a guest. Yeah. I can't sign up with my own PayPal. You see what happens. Hold on, let's do this. 2 months you get at 600, so it's 300 a month. Or and then after that, for 800 you get 2 more months, and then it goes back to a monthly of 499 forever. But we have just lowered our prices back in June, July, I think. So we're not raising any prices. That's our base price of 499, but you could get a discount if you decide to go with 2 months, not four, of a discount price. It's half as much outlay, but also half as long each one. So we go to two. It's just special offer. Again, you go to a PayPal. We gotta give you these notices. I'm sorry. This is buyers beware and stuff. And the buyer responsibility and your responsibility. Let's go here again. Always check before you buy. Check on the price up there. Tells you what you. These are for 300 1 month, 400 1 month. This way. By paying a little bit bigger, you endure a lower price longer. That's up to you. We did that. Now, somewhere in December, we probably dropped the first month. Why? It's just we always do that. As we start a new process, we ramp up because we iron out the issues. As we iron out the issue, I think you deserve a better price. And we are just splitting the chat rooms. We have never done. We've had chat rooms all the time, but was bundled one bundle price. But now both having Peter and Mark gives us a chance to run two different rooms at lower price each, and there's an option for those who want to add it. But now, because now that we're getting past the rehab period that Mark was involved with, we're getting on a physical side, physiotherapy. We're giving you an extra incentive. There's one testimonial that just came in today. I'll send that out to you too. It was exceptional, and I was not expecting that. And it came literally this afternoon, like 2:30 or so. So I will. I'll also send that to you with their email and all that. As you know, all of our Rich Ruscio will tell you that. Dennis will tell you that. Those who know me for years. Mark Caffrey will tell you that. We always, Tom Steer, we always share the emails. We tell them, anybody sending us a testimonial, we have to share. We don't change anything other than grammar or spelling, and we send it back to them, suggesting these are the errors. Is this what you meant? Something is off the grammar. Because we got to publish it or share it to you exactly to the T with their email. So you can verify for yourself, ask questions, what have you. But we had an exceptional testimonial today. So I'll try to get that out to you too. With that, um, Mark, I think we're done, but I think we could also, anybody has any questions? We don't want to not give you a chance to ask a question you may have. Anyone. And you can open your mic if you want to do it audio. It doesn't matter.
I'm here, so fire away if you have any questions. No question is a bad question.
Correct. Okay, I don't think
there's a lot of information that I passed down. There's a lot of tech in front of you. It's a lot to absorb. It takes time to really absorb it. Since I've been in there, I probably have repeated in the room an explanation similar to the webinar that we did today. I probably repeat that on a given week, probably 5 to 7 times. So that means I've probably said it 35 times since I've been in the room. Why? Repetition creates a strong memory and understanding. And then you see something you don't understand, you ask a question, everybody sees it. Oh, that's a good question. And then I answer it. Now they just learned. So it's a very good purpose that folks participate. And I think it's a good group that are currently in there. And I think that the team is a great team. There's no question about that. Everybody's helping, and the dynamics are very simple. Give information, give traits so that we all win.
There's a question here from Dennis Parmley. Mark, for you. Of course, I have my own bias about that, but once you take the question, it says, Dennis says, how do you feel about multiple contracts?
Well, I prefer multiple contracts because similar to what I do with a lot of my students in the option side that I teach for a long time now, I suggest that when they put on spreads, they do multiple spreads. Why? Because if you have a one lot spread on and it's a winner, you'll have a tendency to want to take that profit and be done. But if you have multiple contracts on, now you have the one contract to take your profit for what you have expense wise for the two combined, and you have a runner. A runner meaning now you can let that one expand, and that's when you make the real amount of extra money. The same thing is true with futures more than anything because they're so dynamic. You do two contracts, and all of a sudden you get one. We get control. As I said, control is when we're profitable from where we bought it, greater than, and we have our first target to get out. We get out of one, and now you have the runner. Well, what do you do with the runner? You just keep moving the stop up 2 points underneath where it's moving to. You just keep following it. Goes up 2 points, 3 points. You can make it where it's up to 8 points, and you're now just 2 points beneath that, which is six, which is if you sold the first for 3 or 4, you picked up an extra 2 or 3 or 4 handles. I think it's very, very positive way of managing profitability.
May I interject there? Mark, may I interject there?
Yeah, go ahead. You don't have to ask me.
The question is very good, Dennis, and I don't want to discourage it, but you could do it on your own. Here's the reason we have a problem. And maybe later on, 6 months from now, we can get there from a standpoint of the room or the moderator directing that. Okay. We've got to get the group fully in glue with each other on the reporting. I still see a lot of gaps in the reporting because everybody's trading this fast. He's been only here 1 month. It takes time. Already it's a headache to report some things. So at least one, let's say 2 trades a week, we have to huddle. Go back to the video. By the way, we record everything, just so you guys know. There's a chat and there is the recording, full recording. I believe that's part of our transparency package. If you go here, you'll see we don't have today's yet. It takes about usually depending on the size of the file, to go to webinar or go to meeting says it may take up equal amount. So if it's 5 hours file, it takes us 5 hours to be available on their cloud. This is posted on their cloud. We used to also record it locally. No longer they're offered. New versions of that's come online only allows their cloud or local. I'd rather be on the cloud because then I don't have to move it to. I don't want to serve it from my machine, not from here. I don't want to serve it from uploading a 6, 7 gig, 8 gig file into our server, which is not YouTube. What's the one? Amazon Cloud, and then take it from this machine, send it over there, link it to the website to see it. Here we just link them. This takes about 4 hours right now, 6 hours approximately to be available. So we don't have today, but all of these are there. If you click, let's see if you click it, it loads up and starts playing it. It was already there. Why did we do that? Transparency. There we go. No, there's a pass to go there. You could see it. For example, if I hit, this is just this shows the links. The who came in. Here's the. Hold on. There we go. That's just. No, oh, I'm not logged into that. Sorry. I'm a different login. I'm sorry. This is a. I'm sorry. This is the NQ. Yeah, I'm sorry. A different login. I'm sorry. It shows up. You can download. That's the point. But Dennis, we're not there. So if you want to do multiple, you do that. You're on your own. I need to report unitary performance. When you're in performance business, reporting it's got different rules. And so if you have multiples, we have to make it unitary. We're not there yet, not with a given crowd we have. Maybe in a few months. I don't want to promise you. It's performance. Let's see how the crowd reports. Right now, we have a problem with one contract reporting properly sometimes. Sometimes. Once a week, twice a week, it gets hairy. Remember, we're trading 4 or 5 times a day. So that's 20 trades a week on the average, or maybe a little bit more, a tiny bit more. That's 10%. 10% of the time. So we're not into that right now. I'll let you know when
And
we are.
Dennis, I
It
think
depends on the reporting.
sorry.
Hold on 1 second. There's nothing wrong with you do it. You do it on your own. But we have the decorum that dictates what we're going to do and why. Otherwise, the result is meaningless. Remember, I'm a system guy. The results I'm showing you would be meaningless. Remember, I worked for Morgan Stanley and Goldman Sachs. I would report these the way as a consultant. I remember that they could live with it. That's a high bar. I'm sorry to tell you, the crowd we have right now yet, it's not there. Maybe they'll get there. Maybe we can encourage them. Maybe you can help bring it up. Be my guest, not a problem.
But as Fari, I've explained this to Dennis as I explained it tonight. You know, if you do trade multiple contracts, which anybody can if they have the capital and have the wherewithal to do so, I've explained in the room, like I did tonight, the way to handle that. And I think that that explanation is something that will make them better than what they've been doing in the past if they adhere to, that kind of formula.
Right.
If that's what he's asking, I think that's a good thing. I always, Dennis is very open in everything he does. He's
Sure.
obviously tremendous in the room. And, I even make the comment, did anybody trade more than one? If you did, move your stop up to here. I
Right.
comment on that kind of stuff in the room.
I have no problem with that. And the proof is in the pudding. Remember, I'm from Missouri, right? Take a look at this baby. This is my baby. That Spirit of Missouri. That's my baby. Show me. Let me see they are ready to report that. Otherwise, we're gonna have so much headache. It's not worth my headache. Remember, I run an asset management company. For me, this is my hobby. So as long as it doesn't interact with that, I'm fine. But if now we go to multiple contract, you know me, how I trade. I'm always multiple contract. I'll never trade one contract, especially in NQ. But that's a different amount of firepower. It took me years to get there, slowly and surely over time. Yes, I started with one contract, but that was like 5, 7 years ago in NQ to get here. My point is, if we're having issues on reporting, we're not going to. They can multiple trade their own, but we'll take the first exit. Anything after that is theirs because it'll skew our data, and I'm not going to compromise our data. And right now, this is only a month. We're still working here. So, but Dennis, new babe in the wood. You can do it on your own, not a problem. I don't think you need help from Mark to tell you when to peel off the next contract. So, we're not ready to do it for the mass population right now. Any other questions? Okay, Mark, you have any other final comments?
I will thank everybody for joining in and spending the time to listen and learn. I think it's a great room. I think that it's improving constantly. And like I said, I've been saying this for the past 3 weeks. As my leg is healing and I get my energy level back, I think things are only going to get better. And we're on a good trend right now, and I want to maintain that. I'm getting comfortable with a lot of different things that I'm using, so I think those are all positives. And the market isn't going to just lay down and die now that Trump's in office. It's going to be a lot of movement, which means a lot of trades.
Absolutely. Oh no, I love this. The volatility is back, and we need change. With no volatility, might as well watch paint dry.
Yes.
Thank you so much, everyone. We are going to post this. It'll go, as always, with all of our other webinars right here on our YouTube channel, which is youtube.com/HA. I'll be posted right after here. And then we'll link that out to you to your email. And then in that email, we'll have also give you the links again for the 2 months reduced price or 4 months. It doesn't matter which one you want. You pick what you want. It's not a judgment thing. And then sometime in December, we drop the first discount. So with that 1 month discount. Okay. Thank you so much. All the best, Admiral. Thank you so much for your help. Thank
You're
you,
welcome.
Dennis, and everybody else who contributed here.